Hey everyone, John Savarino here, your host, Talking Money. Today's video, I simply just want to do a quick recap on the first half of 2022. What led us to this point in time, because obviously it's been a tumultuous start to the year. So let's look at some of the data, but then also, what are our thoughts, for the next half of 2022, from an economic perspective and a stock market perspective, as well. So let's dive right in. I think a lot of folks, want to say that it's one person's fault or it's a set of people's fault for what our country's facing in regards to high inflation, rising costs, things of that nature. But quite frankly, it's a multitude of things on a global scale that has truly led us to this point in time. I think if you think back all the way to March of 2020 when the pandemic began, and we started throwing trillions and trillions of dollars of stimulus spending, into our country, that's definitely played a factor into this. Fiscal spending has definitely played a factor into this. But in addition to that, monetary policy has also played a factor into this. So, not only were we doing trillions and trillions of dollars of stimulus spending, but we were also doing a lot of quantitative easing, slashing interest rates, at a very, very rapid pace, which inevitably, which we all saw it coming, our economy started booming in a very short period of time. And, eventually, when your economy is on a unsustainable path, like you have to take drastic measures to bring that back to life. But then also, even though there were tensions going on overseas, specifically between Russia and Ukraine, I don't think many folks expected the invasion of Ukraine. So that just was a whole nother catalyst that really sent specifically the stock market into a tailspin, but the global economy in a tailspin as well, specifically with different sectors. So just know a combination of monetary policy, fiscal policy, and geopolitical events has led us to this point in time, and no one can really say what other catalysts could be hiding around the corner. So full disclosure, it only takes one catalyst to send this, up higher, down lower than what we know so far. And, I think for the most part, retail investors, to retail investors, just everyday investors is where I'm referring to. It's really about optics to most of us, right? Is, what's the sentiment that's putting out there? I think the surprising thing is you're still seeing a decent number of retail buy orders on multiple exchanges, despite the Fed's hawkish tone. So that's positive in my opinion. And then of course inflation, right? In March it was year-over-year inflation rate of 8.5%. It slowly came down in April to 8.25%, but that was not received positively because it wasn't falling enough. And then when May's year-over-year inflation numbers came out at an 8.7% number, the Fed knew that, hey, it's time to take drastic measures to bring this down, which was where they did a 3/4 point rate hike, which is the highest that we've seen in 1994. So ultimately, they're trying to slow the economy down, right? I think it's too early to start throwing out recession statements. You really don't know you're in a recession until after the fact. We want to slow this economy down, but if the Fed does it right and doesn't, shut it down, on a dime, then I think things will play out a little bit better than most are giving it credit for. You're just seeing a lot of panic at this point, whether it's in the media and just the way that we talk with each other, because everything has gotten so high from a price aspect. I would expect another 3/4 point interest rate hike when they meet again at the end of this month here in July. But then at that point, I'll be really excited, really anxious to see how some of that economic data looks like after those couple big interest rate hikes. And if it becomes favorable, then I think we could be in for a really positive end of year stock market run for 2022, which I think all of us would fully welcome. So I'll be anxious to see how that plays out. I think perspective is the stock market, historically speaking, has always been a leading indicator of our economy. So our economy, fundamentally speaking, is still quite strong, right? We're still higher than pre-pandemic levels. Even in the stock market, we're higher than pre-pandemic levels. So, they're already pricing in a slowdown in economic growth, right? Or just a decline in economic growth. How much of that decline has they priced in? Have they priced in a recession? You'll have someone that says that we are, and you'll have others that say we don't. We don't know. I mean, you really don't know. But I will say this is that they're a leading indicator of the economy. I would say we're over halfway there to a bottom, barring any other catalyst. But once again, I'm simply speculating, very subjective in terms of how I'm interpreting some of that economic data. Just understand that the economic cycle is the expansion phase, the peak phase, and then the recession phase. If we can kind of just start contracting our economy while avoiding a recession or really a trough, then I think things will just play out very, very favorably moving forward. And of course, the stock market will react very favorably moving forward as well. So especially knowing that we're probably past the halfway point of this bear market, now specifically is definitely not the time to be panicking. Now is definitely not the time to be realizing losses unless you're doing some type of tax loss harvesting with taxable dollars. But know that, hey, some changes could still be made, things of that nature. But this is a tricky time, right? It's a very fluid situation, and, the Fed has to get it right to make this work. So I think in a perfect world, if we can see inflation at about 5% or less year over year by the end of the year, then I think that bodes well for a really good 2023 and thereafter. So just wanted to give my thoughts in the first half recap. Please like the video, leave a comment, leave some feedback, subscribe, hit that notification button. Any topics, any questions, any ideas that you have for us in future Talking Money episodes, please, those are greatly, greatly appreciated. And as always, we'll talk money soon.